All right, yo, what's going on, everybody? Welcome back to another webinar. Hopefully, you guys enjoyed your little longer weekend as we're now approaching the London session. So I'm going to be taking a look at gold. I took a quick look at GJ and just a quick summary, quick rundown. So GJ currently is at all-time high since literally 2018. It's broken through every single high and is currently making new highs at 166.526. So as of right now on GJ, there's actually, hold on, let me mute this person. There's actually nothing you could potentially do because you're in the middle of an impulse. We always want to wait for a pullback to look to actually be even able to take a position on GJ. If we look at our main structure points here on the 4-hour time frame, we have this point being a higher low, this point being a higher low point, and this is our current or our previous higher high, and we have a current new high over here. So realistically, I would like to see a steeper pullback from GJ. If you consult with the daily time frame, what you have is pretty much two areas. You have this 163.868 area of previous support, and then you have this high over here at about 164.682. So I would like to see GJ give some form of a pullback to this range before I start looking to trend trade along with GJ, because I'm not really going to be looking at a 15-minute, a 5-minute time frame to be trading GJ. And basically, if you're not in a trade from this anywhere between this area on, then there's nothing you could potentially do. Now, when it comes to gold, gold is a little bit different. Checking gold on the weekly time frame, what we could see is gold actually pumped up to our area where we were looking gold to pump up to, which is roughly at 2,000, and we have big selling pressure off of this area, which is expected because most people are going to be taking profit at the 2,000 level. Going down to a daily time frame, what we have currently is gold forming some form of a bearish engulfing. So we could actually potentially see gold pull back into this 1960 range. Now, what I'm going to be waiting for gold to look for that pullback into that 1960 range would be a nice close under this previous area of support being 1974. So it's going to be one of two things. If gold can maintain itself under 1974, let's say gold has a clear break to the downside, wait for that pullback, retest, look to go short from this point on. We'll look to short around here and target possibly this 1960 area. Or what I'd look for to look to take a long position would be for gold to actually give us some form of a bullish engulfing candlestick on this 4-hour time frame. So for me to look to buy gold, I would like to see some form of an engulfing candlestick on this 4-hour time frame, and then we could actually look to buy gold, because you could look to buy gold within this area. We have previous structure highs here, we have previous support as well. If we just kind of like zoom out, you can see support very easily there. We also have momentum slowing down, but it just wouldn't be the best buy. It'd definitely be a super aggressive buy where I don't know if it'd be worth the risk, because ultimately the risk reward ratio would definitely be there. Because if I were to look to buy gold, let's just say somewhere in this area, my stop loss is going to go maybe down here under these lows for, let's say, 35 pips. And I'd look to target at least this resistance area at 1988, where if you go on the 4-hour time frame, my apologies, it is the pretty much next level of resistance that you have here, where you also have some other indecision. So definitely be a little bit of a safer target, or you can look to target up here, which would be 1997. So either way, you're getting a positive risk reward ratio out of looking to buy gold. But again, it'd just be like a super aggressive position. So that's what I would be waiting for if you want to play gold buys a little bit safer, because ultimately on the 4-hour time frame, structure is still very bullish. Then that's what I would wait for. You can wait for either the 4-hour bear or bullish engulfing candlestick, look to buy it up into 1988 there, or again, you could actually just take or look to take some form of an aggressive position as long as price can maintain itself above this 1974 area. Now you go down to a 30-minute time frame. Ultimately, what you could do is wait for some form of a 30-minute bullish engulfing, 30-minute bullish variation pattern. Really, it all depends on this 30-minute candlestick, because if I were to be looking to buy gold, first, I'd like to see this 30-minute candlestick close above. I'd also like to see this hour candlestick close above our overall zone as well, and then look for some form of buy signal if you want to trade it on a lower time frame. Or again, like ultimately, if you want to be more conservative, you wait for that 4 hour bullish engulfing candlestick pattern, which then you jump down into a lower time frame and look to buy from that point on. So that's pretty much what I'm going to be looking out for on gold. Again, like I'm going to be waiting personally for price to actually see if price can maintain itself above this area. If price, let's say, let's go to the hour time frame. If price on the hour time frame could close like this, and let's say there's a bullish engulfing, then most likely I'm going to look to take that buy position, because then we have a clear rejection of support, and I'm going to be looking to buy along with the 4 hour trend. The only thing that concerns me with gold buys is this previous daily candlestick. Now, although there again wasn't ultimately a bunch of volume in the markets because it was a holiday, it is still very concerning to see, this huge rejection and, looking to buy gold. So that's the only thing that's kind of keeping me worried about gold buys. Other than that, it's clear as day. If gold breaks under this area, we're going to look for that retest, wait for that rejection, look to sell back down into this 1959 area. Now, anybody have any questions on gold or anything else they'd like me to cover? I'm going to be answering questions for the next.
Can I ask you a question real quick?
Yeah.
Yeah, I drew one of my 4 hour levels at like the previous high at the 1980 area.
Here?
Back one more. 1980 below.
So like,
yeah, right. Yeah. Would you consider like a level? Because that was the previous high, maybe before it broke.
I mean, I would, but I wouldn't consider it to be like a super strong area personally. Just because like if you take a look at like the daily time frame or the 4 hour time frame, right, you'll see that these areas have more of an interest. So let's just kind of remove this one out of the equation, right? What we see overall, if we just kind of zoom out here, is we see support all throughout this range and then resistance all throughout this range. With previous data, you don't really see much at this area over here.
Yeah, I drew my levels at 2000 area and the 1974, but like I drew another one at the 1980 because that's the last higher high made before breaking everything.
I see what you're talking about. It's this area right here.
Yeah, that area. Around that area.
Yeah, me personally, I like to prioritize my other levels more, because although yes, it is our previous higher high on the 4 hour time frame, right? Yeah. If we look at our current market structure now, we have higher low, there's a new higher high here, and then there's a previous higher high. So these would be our current like structure points within this 4 hour bullish trend.
Okay.
Yeah. So, any other questions? Anything anybody would go over?
I had a question, Raul. So, in your opinion, man, I'm still trying to figure out like what session I want to trade. I trade US right now, but US is low key like very volatile, and then kind of like. So, what would you choose at starting out as a new trader?
I mean, ultimately, it just depends on your lifestyle. Where can you dedicate more time to trading?
Got you.
Because there's going to be times where the London session has more volume than the New York session, and then vice versa. The New York session is going to have more volume than the London session.
Got you.
Speaking of like trading weeks, there's going to be some weeks where the market's super low volume, very volatile, very choppy in that sense, and there's going to be other weeks where you look at GJ, price is trending like crazy.
Got you. Makes sense. Appreciate it, bro.
Yeah.
So yeah.
How much would you risk if you have a type A setup and the price is at an H4 level?
Ultimately, that depends on your own risk tolerance, really, is what it comes down to. Because I could say, I'm comfortable risking 5% when you're barely comfortable risking 1.5%. So that's something like you would have to sit down with yourself and kind of determine how much you'd be comfortable risking on that trade. You look at your account balance, you look at the size of your stop loss, and you'd be comfortable. Hey, I'm willing to risk $500 to gain $2,000, whatever the case might be is.
Does that go same with the FTMO or any funded challenge?
I mean, it comes down to a percentage. What percentage you're comfortable risking. Are you comfortable risking 0.5%? Are you comfortable risking 2%?
All right. Yeah. Thanks.
Yeah. So,
hey Raul, a question about gold. Do you think that if today's candle closes being a bearish engulfing candle, we should switch to short-term our bias to sell, to short the gold? I mean, if price goes below 1960 or something like that, should we aim to go short until 1980s, 1918?
the thing is, like, if gold forms a bearish engulfing on the daily time frame, I would look for gold to continue to come down into our previous level of support, which is 1960, and then wait and see what gold does there. Just because of the huge, pretty much rejection of 2000, gold could definitely dip down for a little bit. So I would actually look to continue to short the following trading day. Yeah.
Okay.
Hey Raul, what do you think on US 30 on the daily time frame?
I mean, there wasn't much volume these last few days because of everything going on, but the daily time frame seems very choppy to me. There's just move up, move down. It hasn't really gone anywhere. If you look at where the day closed, they closed around the same exact price in between this small range here at 34,500. So I'd go down to a 4-hour time frame and identify market structure there and see what market structure is doing. And so far, it is maintaining this bearish condition fairly nicely. So I would probably continue to look for it to go short unless it starts breaking above these highs here. Let's say it breaks above 34,634, then I'd start looking for price to go long up to this resistance level over here, where I would then wait and see what price actually does. But as of right now, it's still kind of in this consolidation phase. Overall, though, if we look at the actual direction of the overall flow of price, we see it clearly going down still. There's no like real change or break in structure unless we see price start breaking above these highs here.
Yeah, any tips you can give them on about being patient in the market?
Yeah.
You got any tips
about being patient?
Yeah, like I see so many setups because I trade on lower time frames, and I be trying to catch all the setups and still in, but then it'll just reverse on me.
Patient in what sense, though?
Entering the market.
In entering the market, it really comes down to just waiting for your setup, waiting for that 4-hour rejection, and waiting for maybe a smaller time frame entry signal. Like, I feel like when it comes down to patience and waiting to take a trade, you're just eager to get into the market to try and make money. And those are just actions and emotions that you're going to have to work on over time.
Gotcha. Appreciate it, bro.
Yo, Raul, you said you take your entries on the 15 and 30, right?
30-minute or the hour.
Okay. Can you look at the 15 on gold? Would you consider that like a nice bullish gold founder closing like a minute for a long?
If you want to be more aggressive with it, then yes, that could be an entry signal. Just because, again, like this is the overall zone I would look for gold to maintain above to actually buy. But you got to remember, like the higher the time frame, the higher the signal, right? The more the reliability, the higher the probability that price is going to play out in your favor. Although, yes, it is an entry signal on the 15-minute time frame if you'd be looking to buy gold at this support level.
Okay, sounds good.
Yeah, support is all throughout this entire range over here. So,
thank you, bro. Appreciate it.
Yeah.
Hey, Raul, could you go please to Nasdaq on 4-hour time frame?
Okay.
Okay, because I got trapped twice in a trade I took. You see the shooting star, the fourth candle to the left, okay? Because to me it was a huge rejection on a resistance, and when I moved to the 30-minute candle,
about here?
No, let's see, it's like more to the right.
Like here?
Yeah. Yeah. In that candle, I moved to the 30-minute candles. Yeah. Okay. So I entered like when you see in 1983, like after the big candle, the big bull candle, we have like a bear variation. I don't see. That's it. A bit to the left.
Here?
Yes, that was my first entry on the second candle, and I got stopped out, and I re-entered on the next engulfing bear engulfing.
So you took a trade here.
Yes.
The stop loss where?
My stop loss was just in the weeks up. It was too tight because it moved as soon as I got like 1 hour, I moved to zero and got stopped out. Then I re-entered the trade later on in the bear engulfing in the next one, and I got stopped out for good. So I just wanted to know if what you think about that setting. It was right for you, and what happened was just the market, or what do you think?
There's definitely volatility here in the market. Obviously, see that's clear as day. The only thing is like if you were to take, I wouldn't have taken a position this far down low after just kind of seeing a bullish variation pattern because price closed above the moving averages on the 30-minute time frame. The hour time frame, there's no real like entry signal to take a trade off of. But let's just say I did take a trade from that area. My stop loss would have to go above this area here. My goal is to try and sell as close to this area as much as I possibly can. So, I wouldn't have taken a position down here because it's just not enough information or not enough detail for me to want to take a position down here. Even on the time frame, there's not much information for me to want to trade either.
So I entered again the position like in the second the bullish the bear single. That's it. That's it. I entered again a position. I said that the risk reward was much better, but I got stopped out anyway.
Yeah.
What do you think about that entry?
Did you get stopped out at break even?
No, I got stopped out at the high side on 14,020.
How come? Because if this is let's say.
Yeah, that's it. But I don't know if maybe my stop was too tight, but I just got stopped out at the highest. That's it, like that.
That's about a 1-to-1, a little bit more. You could have moved your stop loss to break even, but still, like in this entire area, it's still not sure I would have taken a position here just because, like, realistically, if I'm looking to take a trade at this point in time, I'd probably look to take some form of a break and retest of, call it this area right here. So let me see what that looks like on the hour. On the hour time frame, it's still. I don't know if I'd say with confidence I would take a position there, especially in the timing of the day. That's in the afternoon already. I'm looking to trade.
Yeah,
it's gonna be pretty much 9:30 London or New York NYSE Open, which will be around this time right here. And you're already trading like around what is this, like 3-4 p.m. So I definitely wouldn't have taken this position. I would look to have traded maybe around here. So I would have maybe taken this position over here, looking for that break and retest, 30-minute time frame. Even then, like there's still no real entry signal here because if price were to have gone all the way this far down, I don't think I would have taken a position there either.
Yeah, because to me it looked like a break and retest, and I have exactly the same area marked on my chart. So that's why I entered twice. But after 2 losses in a row, I quit and I said, okay, no more Nasdaq for today. And I moved to GJ.
Yeah, that's the best thing to do is just walk away.
Okay, thank you.
Hey, Raul.
Good, bro.
Hey, I have a quick question about gold. So how would you calculate which lot size would you use for gold?
It's the same thing as any other currency pair, right? Let's say you enter a long short position. You see that you have, I don't know, let's say you have $100,000 in your trading account. You're trading a funded challenge. For simplicity reasons, right? Let's say I want to risk 5%, right, which is $5,000. At 50 pips, I know if I do 10 lots, I'm going to be able to risk those $5,000 and I'm going to get my stop loss hit at 50 pips. It's pretty much just
Oh, okay.
there.
I see.
It's just
All right, thank you.
math. Yeah.
Oh yeah, Raul,
Yeah.
on like gold, right? At the 2015 area, like I got a level there, and I put it back from like 2020, like on the daily or 4 hour, yeah, like 2015 area.
Here.
Yeah, somewhere there. Yeah, because we had that big drop all the way to the left. Yeah, right there.
Okay.
Would you consider like that as like far fetched, or like is it a good like level?
I wouldn't consider it far fetched, but I would prioritize 2000 over 2015 for sure because price
Oh,
hasn't broken above 2000. It'd be different when price breaks above 2000. Then we look at 2015. Then from there, we look at 2070.
yeah, that was like if price was able to like break above. That's just like for like in the future.
Yeah, I mean, we just have to wait and see, basically. So, any more questions? Anybody have anything they want me to cover quick before I end the webinar?
Have you already been over silver?
Say it again.
Have you already been over silver? I jumped in a bit late, so I might have missed it.
No, I haven't. I haven't traded silver in quite some time, so I haven't broken it down.
Okay.
Yeah.
Hey, Raul, could you take a quick look to Euro Australian dollar because I'm shorting right now? What do you think about the setup on?
Said Euro USD.
No, Euro Australian dollar.
You're short.
Yeah, I'm short from like 146.50.
Can you tell me why you're short?
Okay, in 4 hour candles, I will have a resistance area, and in 30 minutes, I see a break of support.
So 4 hour resistance, 30-minute break of support.
Yeah, that's it.
It seems pretty vague. I mean, ultimately, what I see that price is turning bearish, right? It's still in a bearish condition. We look at market structure. We have low, low, lower low. Then we have lower, high, and then this could potentially be your next lower high. And then just basic impressions off the daily. I will look for the daily to come down into your previous lower low, right? Daily time frame is also at a daily level of resistance right here where you had your previous daily highs. You then go down to the 4 hour time frame, you can clearly see that area of resistance very well. And have a break of structure here on this hour time.
Yes, that's right. Just below this, the support you draw, I was where I entered, and I scale it in just 3 candles below after the week of the shooting star.
Okay, where are your targets?
That's where you had your cross. That's my target.
Okay.
This is my TP1, and my TP2 is all the way down.
Seems like a good trade to me. So as long as you identify the position, which is more important, you're not taking the position just out of random. So, any other questions?
Thank you.
Anybody would like me to cover before I end the webinar? All right, just wanted to make sure. So, cool. So, anyways,